You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from this here ever-expanding, ever-exciting Options Insider Radio Network, upon which you can find a legion of great shows, not just the Option Block, but pretty much a show for just about every segment of the options audience out there. If you're an advisor, want to learn more about options, we got a show for you. If you're a basic retail options trader, want to learn more about how to use these crazy things called calls and puts, we have several shows for you. Futures options trader, we have 2 shows for you as well. Techie head, whatever segment you fall into, we have a program for you. You can, of course, find them all in iTunes or Stitcher or AHA Mobile, or by going to theoptionsinsider.com. And, of course, you can also find them all in the old mobile app, available for iOS, Android, and the Amazon Kindle Fire Store. You can, of course, instantly stream all the episodes of the Option Block and all of our other programs on the network. And while you're listening, you say, hey, you know, I like what they're talking about here, but I have a question about that, or I disagree with this, or I have a comment about that. Well, you can do all that built right into the app. Just shoot us an email, a Facebook question, a tweet, even leave us a voicemail, all directly through the app there. Check it out. The Options Insider Radio Network mobile app, available on your platform of choice. All right, and joining me on the old program today, starting off with the man of many hats, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome to the program, sir.
Mark, good to be here today.
All right, and also joining us on the old program today, the man from the mountains himself, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the show, sir.
Always happy to be here on this post-4th of July weekend.
And rounding out our all-star panel, you can't really call him the man from the mountains, because there are mountains in Maine, but not really where he's from. He's more of the man from the coast, a.k.a. the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. He of the famous chat moderation skills. Andrew, welcome back to the program, sir.
I never thought at my age I'd be known for my chat moderation skills, but, that's what it is. It's what it is. I'm good, though. I'm well. I caught a fish on Friday, so really that's all I care about.
Everything else is just gravy for you at this point.
As long as I catch 1 fish a week, I really don't care.
Hence, that's why you live in Maine, sir. And I live in downtown Chicago, and we're all happy. And we have a fun show to do called The Option Block, which is about to get going right now.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, and welcome to The Trading Block. If this is your first time joining us, then this is, of course, the portion of the show where we break down what was trading, what was moving in the old markets, what caught our eye today in the broad market activity. And it was a bit of a down day on the old street. S&P down nearly half a percentage point, or about roughly 8 handles, to close at 17,977, a little bit south of those record levels. A little bit of profit taking as people deciding to sell off of those record levels. As Uncle Mike Tosaw likes to say, there never was a better time to sell than there was late last week, and people took advantage of that. Most of the other major indices down in similar percentages. The Dow and the Q is down about 0.3 of a percentage point each, and the VIX cash ticking up ever so slightly, a little over 1 handle, to 11.43 on the day. Other than that, not really a whole heck of a lot going on from a pure options perspective. I think, Alex, we'll start with you because there was some action in your neck of the woods. In particular, a new addition to the options family today, GoPro. This is, of course, a company I always thought was relatively niche, yet I was surprised at how much interest there was in this IPO. This is GoPro Inc., ticker symbol GPRO. They, of course, make those cool little action cams, I guess you can call them, that you could take out with you and you strap onto your helmet, or when you're skiing or biking or motorcycling, whatever the case may be. They're very durable, and they can take a beating, take a licking, and keep on ticking. You put them in water and stuff. And it seemed like a very niche segment of the market, yet apparently this company is lighting it up. Closing today at $43.97, up nearly 6% today, or 2.39. Yeah, up nearly 6% on the day today, doing about nearly 27,000 contracts, 26,814, which amazingly is exactly equal to its average daily value. Of course, since it listed today, that's not really a surprise. Alex, was GoPro lighting up the old phones at OX today?
Yeah, it was. And the interesting thing is the activity was in the front month, which is no surprise, but there was a smattering of activity in the January 15 leaps. So it's clear that people have some strong views on the stock. And today was the first day to trade options. To your point, average volume and daily volume. But yeah, this is one that people were ready for too, because the orders started to pile in right at the opening this morning. And it was one of the only up arrows on the screen today. Today was a relatively quiet day, with the exception of Apple, GoPro, and VIX, which were all up today. But people were trading GoPro right out of the box. They were ready for this. I don't know if they were anxious, but we saw good activity both electronically and on the phones today in GoPro.
Andrew, I see you leaning towards the short squeeze side of the fence here. This certainly, the paper here has all the hallmarks here of a short squeeze. A lot of upside for days going on out here in GoPro. Pretty much we have listings all the way up to the 60 handle in July and to the 60 handle in August as well. And we saw volume on pretty much all of those strikes. 1,200 of the Aug 60s going up today, 200 of the July 60s. You name an upside strike, it had some volume today. 1,800 of the at the money AUG 42s also going up, but a lot of paper, particularly in some strikes that are fairly out of the money. Here's nearly 200 of the AUG 60s going up. Looks like a Jan 2015, like Alex was saying, 50-60 call spread went up about 300 times. So a lot of upside paper. I'd imagine on a day like today, Andrew, that GoPro was taking up some time in the old pit chat.
It was taking up some time. We flagged kind of the crazy skew early this morning. I don't know, around actually it was one of our clients that did. She's like, wow, the wall's crazy in here. So she would just, trade her own thing. We looked, but the upside skew, some people were coming in just buying upside calls like crazy. So it made for good flies. There was a little reversion at the end of the day. So it was a good opportunity. And you're looking at like the August 43 straddle, and there is $8. So there's something going on in the stock. The combinations are about $1 underwater, so the stock is heavily shorted already. It's always nice they bring it out to list options, and there's already giant short interest in it. So we were looking for squeeze plays essentially, and it looks like there was some upside call covering. A guy that's short, he's the stock's kind of run up in his face a little bit. So now they're going to start buying some upside calls. And I think that caused the curve this morning to kink pretty hard. All those upside calls were very expensive, and we just came up with a nice little trade to sell them. And by the end of the day, it come in really hard. So I guess maybe a holder started just dumping calls. I mean, if you own the stock, I think you'd want to sell some August 60s, but that's just me.
Yeah, I probably would sell Aug 60s all day if I held this stock. But you're right. This straddle is just out of control. $8, $10 out of the money put in August trading for over $1. Just crazy business out here in GoPro. Who'd have thought little action cam company could light up the tape today? I guess that shows how starved we are for activity these days. That anything comes our way, we'll just dive into it wholeheartedly.
It's kind of a hot little camera. I mean, it's in every Walmart. I mean, it's in every Best Buy. It's everywhere. And the thing is you can't really do what you can do with a GoPro, you really can't do with a smartphone. Mostly, I think, is people don't want to risk their smartphone and, put it in a plastic bag and glue it to their helmet, because if they lose it, they're screwed. I mean, at least if, the GoPro cracks up or something, it's hard, you have to work to break them, but you're not going to create that risk with your own mobile phone, even though your mobile phone takes lots of pictures and stuff. But for people that are kind of busy and athletic, it's not a niche that's going to be attacked by at least the cell phone makers, right? It probably could be attacked by, the Nikons or, that type of world. But at least for now, it's not going to get blown out by, the digital camera in your phone. So, I think it's a good story, good growth story. And, we'll see what happens. But right now, I would guess the stock's probably going to get squeezed higher before it goes a lot lower.
That's the funny thing, is that this thing already has a ton of competitors out there. Sony makes a version. There are legions of sub $200 action cams out there now. That's what you want. GoPro is actually the higher end. You mentioned they're in Walmart, but they're like $300-$400 for these things. They're not inexpensive little throwaway toys. They're actually fairly decent cameras. That's why I was always surprised at how much traction they got. You have to really want to record your skateboarding videos to spend $400 on a camera you're going to stick to your head. But apparently a lot of people do.
I don't know, I'll probably be getting one this winter to, glue on my hockey helmet.
I say for all your hot skates?
Yep.
For the live lobster reeling in footage that we all are dying to see here?
You guys probably will be seeing that at some point, just for a giggle.
Yes, I will certainly giggle at that. All
I
right.
will link it to the show. The ratings go sky.
Yes,
sky high.
yes. We added 3 more listeners as a result of that hot lobster footage. All right, Uncle Mike, save us here. You had a little bit of action in your neck of the woods. That one holding a pull. I'm not sure. I think that's foreign. I'm not familiar with them. They're up about 2%. So you probably had a pretty happy day over there, I'd imagine.
Yeah, it was a happy day. And then, right now, what I'm thinking about doing right now, we're talking about these lobster pictures. I just have I think I might send you guys one of my famous salmon pictures to put onto the site too, of a salmon that I caught up in Alaska a couple of years back. But anyway, I digress. You got me thinking about fishing there. Thanks a lot, Andrew. Anyway, yeah, getting back to it, Apple had some news on good sales, so it's up a little bit today. Other than that, it wasn't too much action. We had a little bit of a down day, but one thing that I want to point out to everyone is, yes, the S&P was down 7 handles today, but 7 handles today isn't like what 7 handles was 3 or 4 years ago, just because the S&P is twice as much as it was a few years ago. So keep in mind, this is like the equivalent of a down day of like 3 or 4 points a couple years ago. So yeah, we were down today, but we really weren't down all that much. So not a huge day to me.
And for all those playing the home game, and listeners, by the way, all you guys keep writing in about the dates. I keep forgetting to say it. So we're recording, of course, today, Monday, July 7th. You'll be hearing this on Tuesday. Uncle Mike, for the people playing the home game out there, you still naked to the upside and just long putting stock pretty much and letting the dice fly high, or you've been doing stuff out there?
Been doing stuff, but been doing different things for different people, if that makes sense. For the an Apple, I did sell a little bit of upside premium today. I couldn't resist. And then are you referring to Apple or SPY?
Pick your poison, sir.
All right, SPY, I am still naked long upside, and I'm going to talk a little bit about what I'm doing more specifically in the trading block today with that. But in regard to Apple, selling a little bit of upside premium, but not a lot. Just I could not resist the rally today.
There you go. He could not resist, listeners. Danson, flirting with that 700 pre-split level, and Uncle Mike couldn't wait any longer, had to pull the trigger, write some upside. Probably not a bad call here, all things considered. All right, that's going to do it for the old option block, and now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, you know what that funky tune means. It's time once again for the old odd block, the portion of the show where the Rock Lobster and myself dive into some of the weird paper we saw lighten up our collective tapes today. Going to kick things off with URS Corp, URS Corp, ticker symbol URS, not surprisingly, closing today $52 even on the money, up about $1.25 or 2.5% on the day. This is the name that does a whopping 300 contracts a day, so just a monster, a titan from an options perspective, doing 10,000 today, so fairly sizable in the old volume department. And what we saw in particular that caught our eye on the old URS front was some upside activity in the AUG double calls. Oh, and I know for all you people who write in all the time saying, hey, what does it mean when you guys say double? Sometimes the floor parlance still sneaks out of me every now and then. That's just 55s. So it was easier back in the day to say double than try to arb 55 or something like that. So it kind of got stuck that way. But yes, the AUG 55 calls went up nearly 2,000 times. When we profiled it on the site, we profiled a nearly 400 lot going up, 388 to be precise, going up for $1.20 paper buying on these. That went up in one block, but then we saw more going up throughout the day at consecutively lower prices to the total of nearly 1,936 to be precise. And all of this is opening paper. How do we know that? Because there are 0 contracts open on this strike. So looks like somebody gobbling up some upside here. We were talking about gobbling up upside in GoPro, but that's not the only name seeing some upside gobbling today. Andrew, tell us about the turkeys on fire out here in URS Corp.
Yes, gobbling louder than the turkeys in Maine, I think.
Yes.
You don't see like buying those upside calls very often, and vol up a little bit.
Yes, it's such a rare trade for the odd block, buying of these upside calls.
Exactly. Well, you know what? This is in a stock that like builds stuff. You know, they have a dividend. They're like a real company. It's not just some, schlumpy biotech stock or whatever. But somebody's buying the August. But you buy the August 55 calls, I guess you're expecting the stock to go up. So just general buying volume all over the place. I guess they're looking for a bit of a move into the earnings here. So it's not like the thing is a gigantic, it's not like it's a really gigantic earnings move. It only moves like, a couple of bucks or something. So, I mean, I guess it could make some kind of a move, but just good old fashioned. I'm going to buy some of the August 55 calls. And, as you and I know, the clock starts ticking yesterday. So this URS better, maybe there was news or something on it. I didn't really look hard for the news, but potential takeover, I guess. I don't really know, but feels like a newsletter trade to me.
Yeah, the post-block volume does speak a little bit of newsletter type of volume, people filtering in at later levels. Of course, they didn't buy it up at maddening ever higher levels, which is usually also a hallmark of the newsletters getting in regardless of the price or level. They actually got on a little bit better levels, so maybe they were savvier newsletter traders. But still, an interesting one. We will keep an eye on that one. File it in the to-be-watched column as we move on to our next victim here in the old odd block. If you are a fan or addicted to, or perhaps your kids are addicted to Candy Crush, listeners, then you're familiar with this one. This is King Digital Entertainment, ticker symbol King, closing today $20.72, down about $1 and change, or a little over 5%. This is the name that does about 2,500 contracts on any given day, doing about 4x that, just a hair shy of 10,000 contracts today. So pretty sizable from an ADV perspective. And what caught our eye in particular, there was pretty much a flurry of paper. There was paper in the front month and a lot of active strikes out here. But what really caught our eye in the King Digital Candy Crush realm was some action on the Nove 20 puts. In particular, we saw 2,000 going up in one big block for $2.45. The open interest, 632 contracts. This is all opening paper. Of course, when you dig a little deeper into that trade, you see that went up. Looks like it actually went up tied to stock. I don't know if it was done 1-to-1, if it was done on a ratio. If it's done 1-to-1, clearly this guy looking to get long a little bit here, but I don't know the exact ratio. Do you know the ratio that he did the stock here, Senior Rock Lobster?
I unfortunately do not. It's too hard now to.
Yeah, they really obscure that stuff.
Yeah.
But we know listeners, put plus stock equals call, so do that math when you're playing the home game, and you should be all right.
Oh, yeah, they just, they traded this, I think, when King was trading at like 22 or something today, near the highs of the day. I don't know what the ratio is, but, you buy puts in stock, you want the stock to move. Essentially, you just want it to go up, go, move anywhere. So at least from that point of view, the guy got, you got the $1.25 move today, but it feels like this is sort of like a long-term play for them. You buy November puts, you're really looking to hold on for kind of a bigger home run type of win here. Like maybe the stock goes to 30, who knows what the deal is, but they're looking for a big move. That's how I kind of see the Candy Crush, that kind of play like that. So, it's like it's more like an investor type of, trade, but not much open interest to speak of on that particular strike. Vol is up a lot in the thing today, and just looking for, I believe, higher prices, but they want a little protection. It looks like. Going out to Nove.
Looks that way as well. I'm going to wager, given the luck of some of our odd block participants lately, that he probably did it 1-to-1 with stock, in which case he's not the happiest of campers right now. But he's got some time for Nove to kick in here and for things to go his way, because we all know Candy Crush can't go anywhere but up. I love how they have pretty much everything Saga here in their lineup. Candy Crush Saga, Pet Rescue Saga, Farm Hero Saga, Papa Pier Saga, and Bubble Witch Saga. So apparently the Saga line is where they are making their cash. Good stuff. All right. Moving on to an interesting name. I don't think we talked about this one in the odd block, at least not for a while. This is one we've been watching for a long time here at the Options Insider. This is Zions Bancorp, ticker symbol ZION. Not watching them so much for their movement in the marketplace or as a trading opportunity, but more because they did some interesting stuff. They had some interesting ideas a few years back about ways to make it easier for companies to distribute incentive options to their employees and to make it much more tradable and liquid. And they created a new product. I forgot the name. I think they were called Z-Share or something like that. Z Options. I'd have to dig up the name. But they created a new product that essentially was going to become this new tradable liquid type option that you could provide to your employees, and it would be something easy to track and have an easy market value, and it could easily be accounted for in various accounting practices. It was an interesting idea. I don't think it ever got much traction. So it's a name we're familiar with, but it hasn't really, I don't think, materialized the way a lot of people thought. All that aside, this is the name that closed today, $29.77. And then from an options perspective, ironically, because they list some options for their employees, they don't do a hell of a lot of options volume. They do about 1,000 contracts a day. So not bad from an odd block perspective, but certainly no Apple or even a GoPro. What caught our eye today out here was some action in the near term here, the July 30s to be precise. We profiled on the site a little over 1,010 to be precise, of the July 30s going up for prices between 30 and 33 cents. Looks like buyers on pretty much all of this, and it went up in pretty much small chunks. A lot of guys coming in and lifting offers. So this could be a couple of things. Could be newsletters, again, like we said before, and we see a lot of small pieces. Could be that, particularly in their lifting offers. But because there's 1,000 nearly open on this strike, it probably looks like someone coming in and covering a short call here and looking to be in a bit of a hurry to do it and paying up and lifting offers. to get rid of their upside risk here in Zions. Senior Rock Lobster, is that your take as well?
Yeah, I just think somebody, in a stock that really doesn't move a whole bunch, there was an awful rush to sort of take the options off or get long. So somebody thinks this stock is going a little higher sometime in the near future, most likely in the July cycle. So maybe there's some sort of ruling, something like along those lines. Zion's kind of sort of in the middle of its range, so maybe it pops back up. But again, 2 weeks to go, more out of the money call buying. I guess it's a bull market because people are buying out of the money calls again.
Are you familiar with the product I was talking about earlier, the Zions attempt? I'm blanking on the name now. I'm trying to look it up. They tried to make a listed version of, these essentially flex products that these people get all the time and trying to make it easier to create incentive options. Are you familiar with this at all, Andrew?
No clue at all what they are. Sorry. I've never heard of them.
All right, moving on to our final victim here in the old odd block. This is EWG, actually. This is the iShares MSCI Germany Index, closing today $31.29, down about 40 cents or so on the day. This is the name that does fairly robust volume from an odd block perspective, about 2,000 contracts a day, doing about 5x that, about 10,000 contracts today. And in particular, about 80% of that volume coming in one pretty tight put spread here in August. We saw the AUG 30-31 put spread. I gotta love these really tight $1 spreads, going up 4,000 times. So actually a total of 5,000 on the day, listener. So pretty much all of that volume coming in this one spread. When we profiled on the site, it was only 4,000. They added another 1,000 after the fact. They went up in two large blocks, essentially. No open interest to speak of on any of these strikes. This is all opening paper. The put spread went up for a quarter, paper buying. So here we have it, Andrew, paying a quarter for a $1 at the money put spread. Walk us through what logic you can find in this, if any.
I guess they think the Germany index is going down. Normally, when you see this kind of size paper in these ETFs, as I recall, it's usually a little better. They do better in the currencies. But this to me is like a love your broker type trade. I'm not, I guess it's a small risk. It's trading 31.29. On a percentage basis, though, you need the index to drop, 10%, right? Because it's 31.30. Well, 10% would be $3. So you need let's say you need a 3% move to make this worthwhile. So I guess it certainly can happen. We just haven't seen a lot of 3% moves out of these indexes lately. So it's kind of a cheap shot. I'll give him that, or give her that. But
this is the big wet smooch to your broker right here. 10,000 contracts for a $1
It feels
spread.
I don't know. I think I just buy the 32 calls and buy half as many and just put the same dollars at risk, and at least, I don't know. I don't see the point of it, but maybe somebody does. They're picking up a little skew there. They're only spending a quarter, but you are going to need like a, 2%. You're going to need 2-3% down move really to see any real money out of these things. So maybe they're looking for protection, and that's what they're doing, but it is feeling like kind of a love your broker trade to me.
Since we're talking about brokers, you might as well keep on rolling right on into our next segment. Yes, it's time for the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It's time for the Viceroy to don his fanciest of fancy hats and take us behind the scenes into the land known as Options Expressed by Charles Schwab. Alex, in addition to putting on some serious long-term upside there in GoPro, what else was going on over there at OXHQ today?
So the equity desk was having a relatively quiet day, and we talked about the fact that the only names with any traction today were really Apple and GoPro, and even the names that have had traction lately, the Facebooks and Twitters, were quiet today. But the futures desk was busy today, and one of the things, Andrew in the unusual activity block was talking about the large trade in the German ETF, and I always talk about the macro issues of what's going on in world markets. And interesting thing that you see today is if you look at the sovereigns, and the futures desk kind of turned me onto this because they were doing a lot of activity in fixed income. But if you look at the sovereigns and what's going on, our 10-year is now a 261, almost 262 off the 240 lows. But the interesting thing is our 10-year now lines up, and I know if I said this a couple of years ago, people would have laughed, but our 10-year yield is about the same as the Italian and the Spanish 10-year yields. And I think a couple of years back, we would have written those both off and kind of be shocked that those aren't trading 200-300 basis points above our 10-year. So a lot of activity in fixed income, a lot of speculation about what's going on in fixed income, and especially what's going on in world markets. So for that little portion of our audience that trades interest rate futures and interest rate options, a lot of interesting stuff going on today. The German 10-year, which you and Andrew just talked about, and the slowing economy in Germany, and I suspect that's what that put spread was about, the slowing economy. The German 10-year is at 125, which in terms of Western countries, with a little asterisk up put up there with the exclusion of Japan, which is trying to come back from a real dormant economy. The German 10-year yields about half of what ours does. So why do I point this out? Interesting stuff going on in a macro sense in what's going on in interest rate markets. And I think we're going to see yield curve flattening coming forward here, especially in the United States. I think we're going to see some real volatility in the 2s and 5s. I think we're going to see the 2s and 5s pop a little bit. But some interesting stuff going on. And I know every time I talk macro, I get about 40 emails that tell me just stay with Apple and GoPro and Twitter. But some interesting underlying currents going on in today's market. And I think for those of us who trade on a regular basis, I would keep an eye on what's going on in the sovereign rates.
Alex, you can admit it, that put spread was you out there in the German bank shares index.
No, but I know who it was. That's truly sad that I know who it was.
I guess a limited number of players doing $1 put spreads out there. All right, thank you for that, Mr. Viceroy, as always. Keep your hat on, though, because we'll need you again before the show is done. But now we shall keep on rolling right on into our next segment. It's Monday, listeners. That means it's time, once again, for the Strategy Block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is, of course, the portion of the show where Uncle Mike takes the reins. I take a bit of a rest, and he comes down from the mountains, stone tablets, and bubble pipe in hand. And I've always said he has the soul of a poet, this mountain man, this frontier man here. And I think today, if we're lucky listeners, he just may grace us with a little bit of his poetry. Take it away, sir. The floor is yours.
To trade or not to trade? That is the question. Whether 'tis nobler in the mind to suffer the slings and arrows of outrageous fortune, or to take arms against a sea of troubles, and by opposing end them, to die, to sleep no more, and by a sleep to say we end. I'll spare you the rest of that. But I want to go through what I went through today in the trading world. Normally on a day like today, when the markets are down, I like to sell out of the money put spreads. And so naturally, I had no out of the money short puts going into today in SPY anyway, for the various strategies with which I do with SPY. So when I saw the market coming down, I was foaming at the mouth, quite frankly, to sell some put spreads or just some puts or anything. Sell me some puts, by gosh. However, I was looking at it, and I looked a little bit closer at both the front week, the second week, and I did not like what I saw in terms of the amount of premium with which I could take in. Now, granted, you can argue and say, well, but Mike, the VIX was up close to 10% today. You premium snob seller, you. What are you looking for? How much more could you possibly want? And the answer to that question is more. If the market is not giving you what you want, there is no sin to staying in cash. And this can apply to the trade with which I didn't do today, as well as any trade with which you're looking at in any strategy with which you do. So if you are traditionally a put seller and you feel that volatility is too low, then I think it is foolish to try and sell puts if the premium with which you are looking to receive is not there. Here's why. Over time, you're going to have various risk rewards within your trading. If you're not able to make as much as you're looking to make by selling the premium with which you want to sell, then it's going to add up throughout time. And if you're not able to get the proper risk reward on a trade, then quite frankly, you're better off in cash. I'm more than happy to sit in cash for weeks or months or whatever it takes until I get what I'm looking for. Now, I've never stayed in cash for months by any means, but my point is that today is an example where I'm looking to sell an out of the money put or an out of the money put spread. I looked up and down, here and there, near and far, but I could not find anything with which I wanted to sell that would suit the needs for myself as well as my clients. So on that note, there's other things with which we can do, and I'll be looking to do other things, whether it's through some type of a calendar, which I looked at and still didn't like what I saw, whether it's through a diagonal, whether it's through maybe a vertical in a different month. I've looked through all those things, and I just couldn't find what I wanted to do to trade to make it right for my clients. So with that being said, not trading can be a very phenomenal trade at times if you're not getting what you want. And that is all I have for today, folks.
Sellest thou some puts, one of Shakespeare's lesser-known second-tier plays, but personally one of my favorites. I don't think it gets the recognition it deserves. What sayest thou, Uncle Mike?
Well, everyone knows that Shakespeare was an option trader.
Yes.
I mean, that's just the way it was.
The man was ahead of his time in many ways, and that was just one of them.
Absolutely.
All right. We've beaten that to death. And now, because we have a little bit of time in the old show, we'll get some input from you guys. We'll open up the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, this is, of course, the portion of the show where you guys get your chance to join us here on the old All-Star panel, make your questions or comments known. A lot of great ways to do that. Of course, you can use our mobile app to send us a tweet, a Facebook question, an email, even leave us a voicemail. All can be built into the app, or you can leave us a comment on the website. No shortage of ways for you guys to make your opinions, your questions, your comments known to us. But before we do that, I want to mention really quickly, I did find what I was talking about earlier in the show, the Zions Direct Auctions, and they created a product right about the time we launched Insider. That's why it rings a bell with me. It was in 2007, and it was called the eSource, and it stands for Employee Stock Option Appreciation Rights Securities. And I'm looking at the definition here. It says it's to provide a market-based alternative to employee stock option valuation for different employee stock option plan holders. They are tracking instruments that measure the cost of the underlying option grant by making payments to holders when employees exercise their options. A fair market value of eSource, and consequently the option grant is determined in a competitive online auction. A really cool idea. Unfortunately, they never really gained traction. They're still around. You can still go to the auctions.ziondirect.com website and check out the auctions for yourself. but I don't think they ever really took off in the public the way they were intended. But still, from an options perspective, a pretty cool stuff nonetheless. All right, now we're going to keep on rolling right on into our first question. This comes from Tom Simpson. He writes, "Hey, all-star panel." And he puts in parentheses, "Viceroy, meatball, lobster, uncle, and the voice." I guess I'm the voice. "I'm sitting on some gains in Ford, and I would like to and I would like to protect it. I'm looking at the December 17 put, currently trading for 82 cents. I know you guys have said aim for about 2% of your portfolio for protection, but my math shows this to be about 5% of my portfolio for decent near at the money protection. What are some ways that I can do stuff to make this protection more affordable? I very much enjoy the show, and I am wearing a fancy hat as I write this letter." Tom, well, there you go, Viceroy. Your messages are sinking home in our listeners, at least when it comes to haberdashery. This is an interesting one. We get this a lot. As you can imagine, this is where the rubber meets the road for a lot of options traders. In fact, a lot of guys like Uncle Mike, this is what they spend a lot of their day doing, is finding ways to pay for protection. So there really is, this is definitely an art as well as a science here, Mr. Simpson. And Andrew, since you are indirectly referred to in the old email, I'll start with you. What do you have to say here for a friend who doesn't want to pay 5% for decent protection here in Ford?
All I have to do is say, the problem with Ford is, trying to sell some calls to sort of finance this one. I was just looking around, even looking at July, maybe after the earnings you finance it. I was just looking at like 17.5 in July. I'd have to look a little bit, but I think the best thing really for Ford is just sell weeklies. You look at kind of a pile of weekly premium that you want to take in, and every 2 weeks, you sell one. Maybe go out a week later than this. You've got earnings on the 24th until you sort of finance it. I think at 48 cents, you probably only need a couple of call sales to do it. So that's what comes to mind. I would just sell upside calls earlier. I would stay probably, maybe wait till the expiration cycle on this one and sort of whack out one of the maybe an 18 call if it gets bid or something like that. But I don't think it would take too long before you finance that December option.
It was 82 cents, so it would take a little bit longer than 48.
Oh, 82? Why did I think it was 52? Okay.
Because you're living in a fancy dream world, sir.
I'm living in a fancy dream world.
Everything is cheap and beautiful. But you're right. That's probably the approach I think most of us would take. That's what we talk about a lot here on the show. And when Andrew says doing stuff, that's pretty much what he's referring to, is putting on the long-term protection that you want and then doing stuff in the near term to try to offset that. Right now, I'm looking here in August, so the week 2 here, weeklies, Aug 18s, trading for around 15 cents. So if you keep doing those, you're going to clip up some upside in the near term, but if you don't mind putting that on, you could finance a decent amount of that D's put relatively quickly. There's other ways you could, of course, do this. You could do downside put spreads as well, but that gets into the problem we were just talking about before with the German ETF. If you want to pay for a lot of that premium, you have to make it pretty tight, and then the put spread is essentially worthless as a protective vehicle. And then there's the other thing people like to write in about a lot, I've never been a big fan of. These are, of course, the zero-cost collars. If you're going to do this out in D's, you really have to go down to, it looks like off the top of my head here, you can do a 15-19 and actually collect a little bit of a credit, but then you're rolling your protection down from the 17 handle to the 15 handle. Sounds like you want some pretty close protection. If you get down to 15, you've already given up some substantial gains. Again, why I'm not a huge fan of zero-cost collars. Uncle Mike, I'm sure your ears are burning. This is pretty much where you spend the lion's share of your day, financing your protection. So walk our friend here, Mr. Simpson, through some ideas for Ford.
All right. And first off, I can't resist. Never has there ever been a time in the history of Ford for the year 2013, for the year 2014 to sell than right now. So keep that in mind as you're going through this. A couple things on it. Number one, don't be afraid to actually sell the stock. If you've taken gains and you still want to hold on to it and get some type of a protection to it, and you're looking to just kind of like expand what you've already been able to achieve, that's the reason with which you buy protection. If you feel that Ford doesn't have anywhere to go any further and you just are wanting to buy a put just to be cool, so to speak, then I think that's the wrong trade. Even though buying puts is kind of a cool thing, I must admit. But this is your money we're talking about. So with that being said, let's say that you believe that Ford is going to run to 18, 19, maybe even 20. If that's the case and you want to buy that protection with which you described in the email, I like what Andrew's talking about in terms of selling weeklies, but one thing with which I would add to it, if you have some extra cash in your trading account or in your investing account, wherever this is at, and you really should for situations like this, should they occur, the other thing with which you could look at if you don't want to limit upside is take some extra cash and possibly sell some weekly put spreads. So for example, the July week 4 17-16 put spread, right now it's trading at, you can probably get about maybe 8 or 9 cents for it, just depending on where you get filled. So with that, by doing that, doing stuff, so to speak, if you can continue to do that over the course of the next few months, that can add up to finance the cost of that protection. Now, here's the other caveat with which I would like to say with this. If you do choose to go with either selling weekly calls or with selling weekly put spreads and go down that road, don't be a perfectionist trader. Don't assume that you're going to get every penny paid for on this long put, because I can tell you the reality of it is that it's likely that you won't. There'll be some type of market movement that you'll lose money on the put spread, or you'll have to roll up a covered call, whatever route you choose to go with. Have a plan for how much more money do you want to make on this trade? Where do you think Ford can go? How long do you want to hold on to it? And what are you willing to lose in terms of the losing on some of these shorter term trades in terms of financing it, should you choose to do so? Final thought is that don't be shy about doing a calendar put spread, a calendar call spread, or if you don't feel comfortable giving away upside, instead of selling a covered call, maybe sell a call spread to the upside. That is my 2 cents.
The old Tosaw patented near-term put spread to pay for the long-term put with the call kicker. You should call that something. The Tosaw ratio 1/2 time and diagonal crazy pants.
Kind of like Dorothy Hamill had the Hamill Camel. There's got to be something for Tosaw on this
Yes,
one.
I think there should be. We should investigate that and trademark it post haste. Mr. Andrew.
Listeners, give us your suggestions. I'm always up.
I just looked at Ford. I didn't know it just was. I don't really follow Ford. It's been just stuck at $17 for a year. So.
Well, it had some downside. It gapped down into the 15 range for not that long ago, so it has bounced back. So he's probably sitting there saying, hey, I'm back at 17 again. I want to count my blessings and lock this in.
Or maybe he bought in at 15 earlier this year.
That's true. He doesn't say where he got in. I'm assuming this is longer term money, but I could be incorrect. It could be very, very near term. Andrew, you're not a fan of that 17 strike. You think it should roll lower?
I don't know how much the buying, like use of capital, buying that, what that's going to really get him. I mean, it's good. It gives him some protection. Gives the capital protection if the market falls apart, I guess. But like Mike said, it's like what real purpose is the 17 put doing? Are you trying to keep you from losing tons of capital? Are you going to keep the stock forever and just roll the put when you need to? So I think he has to have a little bit more of what he wants to do and focus with it. Because I think relative to how much Ford has moved, that put essentially will soak up all the dividends that he's expecting to collect. So, unless he's financing it, with a stock that's basically, I don't know, it looks kind of like unchanged for the last year. I don't know if just buying the stock and buying that put maybe is essentially the best way to go, to actually make some money on this thing. I guess if he wants to keep it like as sort of a CD type thing where he's just collecting the 12-cent dividend and protecting himself, I guess that I could see that. But I just think that put actually on this one feels a little expensive for what he's trying to do relative to how much, how many dollars you have in and what really is your upside are you expecting out of it. And I don't, to me, that ratio just doesn't look very good.
The come to Jesus moment that all new option traders have when they try to buy a put for the first time. Wow, these things are expensive.
Yes.
Alex, anything for our friend Mr. Simpson before we roll on into Around the Block?
Yeah. First question I would ask myself is, what's your upside target? What's your downside fear? Because the challenge to hedging with most people, this is a question you get every day of your life in the option business. And then you say to the client, or in this case, the listener, all right, give me the litmus test. What do you think is going to happen between now and January? And they tell you $20 upside, $14 downside, and they clearly don't want the $14 downside. But you've just described the stock with an expected zero return. And to Mike's point, I'd sell some of the stock. I think you can overcomplicate these matters a lot. The challenge I have to constantly selling weekly calls is that answers a time erosion question, but it doesn't answer the friction question. What are your transactions costs? And what do you do if you catch that 1 week where it spikes? We did a simulation here, and I'm going to talk about this very quickly. This was the simulation Joe Cusack did, where he compared selling monthly SPX to weekly SPYs, and he scaled them both the same way. And the monthly SPX had 4 times the return of selling the weekly SPYs. I know there's a lot more data I'd have to give you there in terms of strikes. These were 1 sigma out. Because when you talk about selling weeklies, you're answering the erosion question, but you're not answering the settlement question, which is what do you do when you get those little blip ups that tend to round themselves over time? So sage advice from both Mike and Andrew, but ask yourself the question first, what's your upside target? What's your downside target? If the numbers you're giving me are 20 and 17, and I'm making them kind of perfect because that's a zero expected return on the stock, then I'd go look for a better stock. I'd dump out of it.
There you go, Mr. Simpson. A lot of different options for you, pun intended. Meanwhile, we have to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, where we tell you what we're watching for the rest of this trading week. And brace yourself, everybody, brace yourself, listeners, because the madness has returned. Yes, it's time, or it's about to kick off once again. Alcoa kicks it off tomorrow. Of course, I'm talking about earnings season and all the madness that ensues as a result. This is, of course, also prime time of the trading year for a lot of options traders. So should be some fun times ahead. I know a lot of us already marking our earnings calendars with the names that we watch and are paying attention to. So should be interesting times coming down the pike. A lot of fun stuff to talk about here on the old program. Aside from that, Alex, what's catching your eye out here for the week to come?
Watching the sovereign 10 years, there's a lot of concern that the EU is going to slip into recession, that this recovery isn't sustainable. That's troublesome because then the European Central Bank is going to have to start putting some stimulation into the market. So looking at the 10 years, our markets, if it's a good earnings season, and this needs to be a good earnings season, if we get a good earnings season here, the rally continues. And if the rest of the world is kind of slipping, this rally has got a lot to run. Jeremy Siegel this weekend talked about, 20,000 on the Dow, and everybody laughs at him. He's kind of a perma bull as opposed to a perma bear. But if we get good earnings, that's what this market has been waiting for. And with modest interest rates, this thing is going a lot higher.
Mr. Rock Lobster, what's catching your eye, sir?
Looking at these new little names to trade. I like this King and GoPro as far as these things that are moving around. Looking at, again, really low volatility levels in the SPY. And, even if the volatility products can sort of hold up here, we had this little sell-off today. There was a little funky news about repo agreements. I don't know if it's a credit issue thing. It's probably more a temporary sort of market machination issue. But, there's not a lot really to go on until we're looking at earnings. So I'm just sort of waiting until some of them start to shake out.
Uncle Mike, take us home. What's on your calendar for the rest of this week, sir?
Same story, different words, I guess. Wanting to see what earnings do coming up. As you put it, the madness starts tomorrow, and just want to see where we go from there. I think my opinion is that today's dip was a buying opportunity. We don't get a lot of down days in this market, so definitely bullish. But once again, I think it's important to be cautious as well. I won't even say it. Okay, I'll say it. Never has there been a better time to sell than last week. So, but just keep the fingers on the button, folks.
All right. And Andrew unfortunately had to run. So if you want to check out more what they have cooking over there, listeners, surf on over to optionpit.com. Click on that. They should be calling it Pit Chat right now. If they're not, you want to join that chat room, see what all that fun is about over there at optionpit.com. And Mr. Tosaw, what's cooking over there at RCM Wealth Advisors and RCM Futures?
Well, continue to check out our websites, rcmfutures.com. Sign up for our Line in the Sand report or any of the other newsletters with which we have. Feel free to sign up for anything else that we have going on through rcmwealthadvisors.com. And stay tuned. We have a lot of things coming up in the fall. But for now, we're just kind of writing the newsletters and enjoying the summer. So go enjoy the summer as well, folks.
Except when you're listening to this show. Then stay indoors and be fully focused because this is
I disagree, because this show can be listened to outdoors on your mobile app from anywhere.
That's true. You can do that. But I want their full, complete attention. No enjoying the scenery and the nature and smelling the roses, sir. They should be listening to us 100%. All right.
I feel kind of hypocritical because oftentimes where I'm doing the show from, but well, never mind.
All right. And Mr. Viceroy, take us home. What's coming down the pike over there at Options Express by Charles Schwab?
3 webinars, part of a full webinar schedule, but I'll just showcase 3. Wednesday, July 9th, Mike Zaremski is going to do a new customer orientation for futures. Thursday, July 10th, Nina's going to do order entry, new features on the site, and the exclusive Options Express walk limit product. Also, Thursday, July 10th, I will be doing Idea Hub for futures options. This is the new introduction of Idea Hub for futures names in it. We do it live right off the site, so we do it before gold and crude close. Real interesting product, part of the Idea Hub family, the very successful Idea Hub family. Just come to optionsexpress.com, click on the Educate tab. You don't need to have an account. All the educational resources are free.
All right. Thank you for that, Alex. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and for installing the app and, of course, for sending in such great questions. Keep them coming. A lot more of them in store for you guys on Thursday. That's our mail block day. And, of course, we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.